All down. All silent. Going. Go. So congratulations.
Welcome to the Current Market Insights podcast, brought to you by Harris Partners Real Estate. Each episode, we chat with real estate author and industry leader Peter O'Malley to discuss the current property market conditions and provide insights to assist you on your property journey.
Hello and welcome to another edition of Current Market Insights. I'm your host, Kieran O'Brien, and with me as always is my good friend, Mr. Peter O'Malley. Peter, hello.
Great to see you, Kieran.
Great to see you, Peter, and thanks for coming in for another week. I wanted to talk this week. There's been a fair bit going on in real estate. There's been a fair bit going on in politics, and the first thing I want to chat about today actually combines the two. Negative gearing is a topic that's obviously quite sensitive in real estate, and it's a very polarising topic. You either love it or you hate it seems. And this week, reports have been made in the Herald that the Albanese Government has contacted Treasury seeking some advice on, negative gearing, what the policy looks like and what changes may or could be made. I guess my question for you is, do you think, firstly, that the Albanese Government looking into negative gearing is, important? Is this a significant thing? And if it is, what changes do you think might be made or could be made or may even be considered, and what impact would they likely have on the investment market?
Look, this is a discussion and a debate that took hold in 2019 and was largely responsible for Bill Shorten losing the federal election, as we know. People who are not into negative gearing, and I'm actually not into negative gearing, but I support the concept. And I don't support the concept of negative gearing because it's a flawless or perfect strategy, Kieran. I support the concept of negative gearing because people's finances and the taxation system and the incentives in place are now largely built around it. And yes, there are some advantages for investors, taxation advantages for investors via negative gearing. But what we need to keep in mind about a property investor is that whilst they enjoy some taxation benefits whilst they own the property, during their ownership of the property, they will pay council rates, not the tenant, but the landlord will pay council rates for the duration of that. They will pay land tax on the property if it's over a certain value. When they do make a profit on the property at the end, they'll pay capital gains tax. When they purchase the property, they will pay stamp duty. They will pay water rates on behalf of the tenant. So a property investor contributes to all three levels of government during their ownership of an investment property, even though they do get some taxation benefits back via negative gearing if they structure themselves that way. So to say the budget's not running the way we'd like it, let's just pull the negative gearing piece out of the jigsaw puzzle and carry on our merry way, you would cause a drastic fall in property prices. When I say drastic, somewhere in the order of 10%. Anytime a government fiddles with taxation incentives in a property market, it has ramifications. Either they stimulate the market or they depress it. And that is why property prices in Victoria are falling at the moment because of taxation changes down there toward investors.
So there's a couple of points there that I'd really love to talk a little bit more about. And I guess the main point really is that fiddling with the taxation, the incentives on investment properties very likely could cause a crash or a steep decline in prices. Now, there is a whole segment of the market that would absolutely love to see that, right? There's, the Greens Party in Victoria absolutely campaigning on this platform of removing tax incentives so that they can, as they believe, there'll be an influx of cheap properties and everyone can just buy.
So let's stop there and just slice that point that you've made. The Greens Party in Victoria, thankfully, don't speak for the majority of the population. I don't want to get overly political, but you have gone to, an extreme outer left edge there, and they do not represent the ideals of the mainstream population. So it would be crazy for any of the two major political parties to pursue a policy that's championed by, what did you say, the Greens from Victoria.
Yeah, well, look, to be fair, I'm pretty sure that's where Max Chandler-Mather's from, the guy who leads most of this crusade. I raise them not because I think the government should or is listening to their policy ideas, but there is a whole segment of the market, let's call it under 30s or whatever it might be, who love this concept, and social media, online discussions are abuzz all the time about let's get rid of negative gearing because houses will get so cheap and we could all just buy instead of renting. I raised this point not to talk about the Greens policy, but I guess to really just quickly tackle that concept, because to me it doesn't make sense, right? If I'm an investor and my incentives are gone, my instinct is not to say, oh, well, bugger it, I'm just going to sell out for an 80% loss and sell it to a renter down the road so they have somebody. That doesn't make sense, right? So I can't quite get my head around where this logic comes from, that if they remove the incentives, it will impact the market. But where's this immediate just decline in prices that everyone gets a free house effectively? It seems insane to me.
Yeah, well, nobody will get a free house, and the impact of a property market crashing by 20 to 30% will be far worse than housing being a little bit too expensive. The commentary has been allowed to charge in this direction that and I am not a baby boomer, but somehow baby boomers have enjoyed this easy free run, notwithstanding that my parents who are baby boomers and your parents who are baby boomers were probably paying a mortgage off when they were 17% during the 80s and the early 90s, yeah?
Oh, of course, yeah.
Yeah, but somehow the commentary now from the generation coming through, which is, say, the generation below us, is that baby boomers are just everything they've done in their life has created a boom, and they did it really easily during the 70s, 80s and 90s, and that is a long, long way from the truth of the matter. Actually, price growth has accelerated in recent years and made housing out of touch for many people, whether it's a rental property or purchasing their own home. And it is a big political issue. But I think the big political issue is it's too expensive and there's too much red tape for developers to be able to get more stock to market. But thinking that we're going to stop migration into the country and suddenly let's just fiddle with the taxation system and cause house prices to crash and we'll all continue on in their merry way. Anyone who's championing that solution actually has no idea what they're talking about.
Well, yeah, I tend to agree. And I think the conversation has been allowed to charge, and there's certainly platforms increasing all the time for people of the next generation to use this. I guess my only other question for you, they reference in the article in the Herald an agent who looks after a lot of, he's a property management company, looks after a lot of properties. And he says, look, roughly 5% of our properties are actually positively geared. And that is indicative, I guess, of the situation out there where it is very hard to positively gear an investment, particularly in certain cities. Now, if negative gearing was to be taken away and we face a scenario like that where 95%, for argument's sake, are negatively geared, do you think that any changes are likely to spook investors from either persisting or continuing to come into the market?
Well, if we go back to the model that they used in 2019, it wouldn't be retrospective. It'd be about what happens going forward, so to be grandfathered. But anytime you come up with a policy that benefits tenants, you disadvantage landlords. Anytime you come up with a policy that advantages landlords, you disadvantage tenants. It's a classic seesaw because the government is creating rules, whether it be the state government with tenancy laws or the federal government with these taxation incentives. The government policy of the day is a classic pivotal point between a two-sided transaction, but it's a privately managed transaction that actually doesn't the government doesn't control either side of it. They can only control the rules by which it's played by. So on one side you have tenants and on the other side you have landlords. So it's a classic seesaw scenario, and I think the real solution to the housing crisis is to either stop immigration numbers or build more housing. Where at the moment, because of all of the red tape and tripping over themselves and having these philosophical debates about what does Sydney housing look like in the next 50 years, we're going nowhere quickly. And at the same time, even though the federal government said that they would curb immigration numbers, they haven't. They've continued at the same aggressive rate that they have been for the last 2 years.
Yeah, well, I think it's safe to say government policy on immigration is a band-aid that is solving, maybe a spreadsheet, but it's certainly not solving a crisis in Australia.
At the end of last year, Louis Christopher on SQM Research put out his 4 scenarios about what happened to the property market in 2024. And his base case was property prices in Sydney would fall, and that was predicated on the fact that the government would cut immigration numbers. Scenario 3 that Louis had is that the property market would rise modestly this year because the government would tweak certain factors. Interest rates would stay elevated, but in terms of migration, the government, even though they might be giving lip service to curbing immigration, would continue to let too many people into the country. That's what's happened, and that's why the Sydney property market is up for the year, where if it wasn't for immigration, property prices would be modestly down.
And that's precisely why Louis, I think, is the best tipster out there in the market, Peter, that's for sure. Just very quickly then, before we move on too far, you mentioned that one of the levers the government does have is to help with building more homes. And there was an article out this week as well from the Property Council talking about some research they'd done into the under-delivery of new homes in New South Wales, or across Australia, sorry, but in New South Wales it's obviously quite important. And they predict that roughly 100,000 homes won't be built as part of the next 5-year plan just because of red tape, etc. One of the things they talk about, and the research clearly shows, is something that like 40% of the cost of building a new home, particularly in New South Wales, is tied up in government taxes, red tape, fees, bureaucracy, etc. Do you think that the government, realistically, they talk big on housing, but do you think they have any intention of actually making it easier to support population growth that they are so adamant is critical to the economic prosperity in this country?
Oh, it's quite obvious they're tripping over their own red tape, and everywhere they turn they're restricted in some capacity by rules and regulations that have come before them. And when it comes to housing, you can't get anything done quickly.
Yeah.
That's what we're seeing.
Yeah, well, even my experience recently, calling a local council to get advice on what you can do with land in their local environment, right? So what are the rules around subdivisions or dual occupancy, whatever it might be. Even dealing with councils is so challenging because they're either coy and reserved on giving you information, or they actually don't know. They're not even aware of the government's new policy, or they've got no concept of what it actually means. I mean, that's just an example of trying to get information. Imagine, trying to get a DA through a council who is either having difficulties because they're dysfunctional or they're under-resourced or whatever it might be. I mean, it's absolutely no wonder that we cannot deliver affordable housing or even, suitable housing to make it more affordable in Sydney, which is clearly in crisis.
Well, Chris Minz's mantra is build up, not out.
Yeah.
And at the end of the day, if you achieve that outcome, there might be efficiencies in doing so. However, it's highly problematic building up in highly dense areas that are already overpopulated, and that's where they're getting caught. If he continued with the mantra of just adding, he called it adding a new suburb on the edge of Western Sydney every month, but if he persisted with growth corridors on the edge of Sydney, his housing target would relieve some of the pressure that's building up in the system. But instead, they've sort of put the brakes on the fringes of the Sydney basin, if you like, saying, no, we're going to build up, and it's gone nowhere. Chris Minns is now, 18 months into his term. He will be facing the people in not that long, 2.5 years, having promised he would fix the housing crisis. He's looking at going to the next election having achieved simply nothing.
Oh, yeah, exactly. I mean, I live in the Homebush area, which is one of the ones flagged for a new, sort of development up near the station to increase density. And nothing has happened. There's no EOI. I can't find any information about it. And even then, the areas that they've chosen, in my opinion, aren't well supported. Build a metro, let's get a new, better rail corridor or something suitable in terms of infrastructure to actually support this development if you're going to plan it, other than just saying, oh, well, that's a good spot. We could build a few more next to that, no one will notice. I agree with you. I wouldn't be surprised if they go the next election having delivered nothing. Moving on then, Peter, I know that Corelogic have released some data recently at the end of September for their Home Value Index, which is one of their metrics to determine what property is doing across the country. So I know you've got a copy over there. If you can, give us a bit of a rundown of what their predictions are.
Look, well, they're not so much predictions as much as they are outlining what has happened to the property markets over the last month, 9 months year to date, and the last 12 months. And as far as Sydney house prices go, Corelogic is saying that in the month of September, house prices in Sydney were up 0.3%. And for the last 12 months, they're up 4.9%. So when you consider that the inflation reading in Sydney was 2.7% in September, mortgage rates are running at around 6.2%, maybe 5.8% if you're lucky for whatever reason, and property prices are sitting in Sydney. This is at an annual growth of 4.9%. That's about right. That's pretty good, above the inflation rate, below the mortgage rate. When you go to Melbourne, this was one of the surprise packets for me, and this goes to that point we just touched on, that the state government there have taken a stick to investors for whatever reason, and property prices are down 1.3%. House prices are down 1.3% in Melbourne for the last 12 months. Now, when we go to Brisbane, Adelaide and Perth, they are up 13.5%, 14.4%, and in Perth's case, 24% for the last 12 months, which is phenomenal growth. So, a $2 million property this time last year in Perth is now worth 2.5, which is phenomenal growth. And from everything we're hearing, that hasn't stopped.
Yeah, Perth's an amazing market. Obviously, I don't live over there and I've had limited experience, but it does seem to go through these periods of quite substantial boom, and then it does have a sharp decline, and then it kind of booms again. It's a really cyclical kind of market, and I guess that typically probably ties up with the iron ore and the minerals market, which is so strong over there. I again just kind of want to touch on this point. Melbourne property prices falling slightly off the back of the government's stick to investors. Surely, in my mind, that seems like a win for those fringe parties that want to get this outcome, right? They're so focused on getting the house price down in that market to benefit everyone in the pool that they're, as you say, they're not viewing the bigger picture. But I have to wonder, do they think that a 1% drop is suddenly enough to bring all of those renters into the market? To me, it's a sign that the investors are a little bit worried down there, and rightfully so. And for the market at large and for our economy, it seems like meddling in property is a pretty dangerous game, and it can have some pretty serious consequences for just the stability of the market across the board.
Money, we've said this before, money will always find a home. So you'll find investors that both choose not to enter the market as an investor in Victoria, or who are in the market in Victoria and choose to exit, which will put further upward pressure on the rental market. And why, as you say, these fringe groups that seem to demonise property investors, why they've never accepted the point that negative gearing entices investors into the market, and it actually helps keep rent supply solid and rents at a reasonable rate, notwithstanding the growth in the last few years, I do not know. The rental growth in the last few years has nothing to do with domestic investors trying to take advantage of tenants. It has to do everything to do with the immigration numbers that the federal government have overseen, combined with the inability of state governments to get supply to market. It is a supply and demand thing, and that is the reason one can't find a reasonably priced rental property on a Saturday morning.
Oh, look, absolutely. And unfortunately, I don't think any amount of clear or simple explanation is going to change some people's minds on this topic. As we move to wrap up then today, Peter, I know that we talked about Louis briefly at the start of this, and we do certainly value his insights as a property analyst. I know his weekly auction numbers have just come out this afternoon as we record on a Tuesday. Any update on what the market's looking like across Sydney and how it fares against the last few weeks in property?
Look, every weekend in September in Sydney recorded a auction clearance rate of below 50%, Kieran. So that's the big takeout for the first month of spring in 2024 for both purchasers and vendors. and my first point about that is that just speaks again to the point that we make to all of our clients throughout the year and have done for the last 20 years, is one of the greatest myths in the property market is spring is the best time to sell. Every year the auction clearance rate takes a noticeable dip in spring because too much stock comes to market at once. I don't think the property market is going to crash. I don't think that's what the auction clearance rate is telling us there, because a lot of the properties that fail to sell at auction do tend to clear in the weeks afterwards. What we're seeing there is that too much stock has come to market at once, diluting buyer demand. Those intelligent sellers that got their property on the market in early August with a late August sale, or even in the first few days of September, have done noticeably better than some that have come after it. I think by Christmas we'll probably see another wave of fresh stock coming to market after the existing school holidays, and then as you get closer to Christmas, stock levels will go back down and you can expect clearance rates to come up. So there were 1,601 scheduled auctions last weekend, 47.3% auction clearance rate, 371 were sold prior, 387 were sold under the hammer, and a whopping 192 were rescheduled out of the 1,600. So that's basically over 10% there have said we don't have enough interest this week, but if we post-date the auction for early October, there'll be enough buyers for us there on the day, and maybe there will be and maybe there won't be.
Yeah, gosh, that's such a big jump from when we were doing these wraps a few months ago, saying it's a pretty busy weekend because there's 800 auctions scheduled, and the clearance rate was a lot healthier. I'm not surprised, to be honest, that 12.5% or so is rescheduling, as you say, off the back of this stock flourish. Do you think, or have you noticed with buyers over the last few weeks, is there any sense or indication that buyers feel like they've got a little bit more power or autonomy in negotiation at the moment?
Depends what segment of the market you're in, yeah.
Okay.
Yeah, so there is a bit of that. Suddenly we've got choice. So thanks for showing us your listing. It's a nice house. We'll compare it with the three that we saw this morning, and if we're interested, we might call you on Monday. Don't call us, we'll call you. There's that sort of thing coming through with the buyers at the moment. That's after, buyers were starved of opportunity and choice during winter. It's all cycles when you're a real estate agent. How you play the game in winter is slightly different to how you play the game in spring. And as I say, I can tell any buyer that's overplaying their hand at the moment, they'll see another wave of good stock from the October long weekend till about mid-November. And right at the point that they're full of absolute confidence that the property market is going to crash, heading into Christmas, suddenly the stale stock that's sitting around will start getting gobbled up. Listing numbers will plummet, and you'll see prices creep up a bit, actually.
And I have to laugh yet again, come Christmas Eve or the day before, we'll have those same buyers calling us saying we need to buy something before the year is up.
Yeah.
And you're right. They'll leave themselves no time and end up with no choices.
Well,
as happens every year.
Every year, as we know, we end up selling 2 or 3 properties on the 2 or 3 days before Christmas because the vendors want their affairs concluded before the new calendar year, and the buyers are saying, hey, we've probably overplayed our hand all spring here, and now we've missed out, and we don't want to be home buyers. We don't want to be home buyers next year, and we're not even going to get a proper look at decent stock levels until February, maybe March. So let's do the business now. So look, from a buyer's perspective, find yourself the best house you can for the budget that you're working with, and do the business if that's what you want to do. I think if you're out there hunting high and low for a bargain, you probably won't find it. And it all comes back to those immigration numbers that we just discussed, Kieran. There's just too many people with too much money coming into this city. Take advantage of any dips. But, if you went into the share market and you wanted to, if you're waiting for BHP to drop 40%, it's not going to happen. And it's the same with Sydney property. It's not going to have a cataclysmic collapse in price anytime soon.
Yeah, I think one of the best pieces of advice you ever gave me, Peter, is buy the best house you can for the money you have at the time you can, because if you try to time the peak or the trough, you won't know until it's done both times.
That's right.
Yeah, good advice, Peter. Look, really great topics today. I'm certainly looking forward to looking a little more closely at the government's policy changes over the next few months, because I think there's some interesting things to come. As always, thanks for coming in and talking with us and our listeners on the podcast.
Thanks, Kieran. All the best.
And thanks to everyone for listening to Current Market Insights. We look forward to speaking with you next time.
Thanks for joining us on the Current Market Insights podcast, brought to you by Harris Partners Real Estate. The podcast providing real estate insights you won't find anywhere else.